Well, unless you've been under a rock today, you saw the cryptocurrency market collapse by a good $6,000. But what really happened? And is this the end that so many people will tell you? Well, I'll give you the cold hard facts as to exactly why the market dumped and what you need to be aware of over the coming weeks. All of that in this video. Make sure you hit that like and subscribe button. We give you the latest content, news, reviews, and education, and everything else you need. So do check out the links in the description as always. If you're looking for a DeFi project, check out Marbits. It's a brilliant project that I launched. Definitely come and join us. But let's talk about this Bitcoin crash and exactly what went on. So take a look at the Bitcoin chart here on the 4-hour candles. You can see we were kind of hovering quite nicely around 102,000. And then guess what? We open up today and Jerome Powell and the Fed decide to crash the market. What am I talking about? Well, it was announced today that the US Treasury yields actually skyrocketed. We've seen the 10-year Treasury yield at the all-time high since April last year. Now, this is ultimately the way the money printer works. Lots of people have been talking about how bullish the money printer going on is, how this is going to benefit many different economies. But the reality here is this isn't just as simple as print some money and distribute it out. There absolutely is a use case behind it. And the way they do this is by using something called Treasury bonds, which then provide Treasury yield. Now, Treasury yields are ultimately interest rates in which the US government pays for borrowing money. It also inversely tells people what they get as a benefit for having them. So you tend to see countries, big financial backing, and much, much more take on these, well, securities or these yields. And like we said, April last year was the last time we saw anything like what we've got on the 10-year Treasury, and that is ultimately what pumped the market. You can see here, the 10-year Treasury climbed more than 7 basis points to 4.693%, earlier hit an intraday high of 4.69, reaching its highest level since April 26. The 2-year Treasury yield gained more than 2 basis points, up to 4.299%. Now, I know what you're probably thinking. Okay, 2-bit, that makes some sort of sense. How does this affect the cryptocurrency market? Well, the reality is people will just pull capital out of risk assets or something like Bitcoin and go into these Treasury yields, especially something like the 2-year Treasury that's increasing by 2 basis points, giving people a yield of 4.2% on their investment. Well, depending on how you look at it, for some people, that may be a better term than investing in Bitcoin or cryptocurrency, especially if you're a naive investor to this market. If you take a look at just on the short term, and this is why the market did exactly what it did. Look at the 1-month Treasury up by 0.028 to 4.338%, 3-month up 0.031. The 6-month at 0.027, into the year at 0.026. So a significant increase across every single Treasury outside of the longer term Treasury markets, giving a potential yield on a 1-month Treasury of 4.3%. The reality is people simply are not prepared to take the risk when it comes to the cryptocurrency market, and are prepared to go and get that. Also, don't forget, we actually got some relatively positive news in the market, particularly around job openings and labor turnover. These were actually really positive, coming in higher than expected. Now, tomorrow we have job loss claims. We'll see what that looks like. But ADP's private payroll report following on Wednesday is forecast to show 130,000 jobs were added in December. Before the December jobs report, the Bureau of Labor Statistics expected Friday. That might change the market a little bit, but the reality is that we are going to see the unemployment rate probably rise as well, and the markets simply don't like that. Again, talking specifically in relation to the cryptocurrency market, we obviously then saw a significant amount of liquidations coming, while at the same time, and this is always worthwhile thinking about, whenever the market was collapsing, there was some big money being spent. We saw the ETF inflows around 4.3 billion. That continues to be very, very strong, while at the same time, everyone is completely freaking out of the market. 266 million worth of long liquidations. That ended up nearly being 500 million. We'll take a look at the chart. And then also on the back of that, the Fed giving their predictions that there will be 1 basis point cut this year. Now, if you remember, lots of people were incredibly bullish about significant rate cuts this year. Then we got that news in December that we were only going to get 2. And now it looks like the 18th of June will be the first time predicted we'll actually get a rate cut. The markets simply don't like that. Now, all of this can change. On January 20th, when Trump comes in, this absolutely can change, and it can change quite quickly. We'll have to see how that all plays out, and I'm sure that there will be policies and much more coming in to support it. Remember, Joe Biden banning drilling and offshore drilling, which Trump will obviously change. This is going to be a key driver. If you can bring the cost of living down, there's an argument that inflation should come down naturally, but people will simply just have more money. This can support the narrative in the market. Now, what I will say, we talked about this chart specifically, especially this price zone a number of times. We actually went in there. We retested the low end, currently holding out. I was talking about this on my live stream. I'd like to see us hold and then start to push back up to meet the 200 exponential moving average at around that 97,800. That's the key price I'm looking for. I think if we can rally up to that point, we should be relatively solid for a strong end to the week. However, look at the 20-day exponential moving average. This big red line coming down here. This is showing a bearish trend. We need to see this reverse back above, showing that bullish cross and setting a precedent to go back to the upside. If you take the short term, by the way, everything is kind of consolidating. The market's not really sure where it wants to go, but look out. I think the Asian market could come to the rescue here, seeing a rally of around 97,500. If we can maintain that through the US opening tomorrow, then I think we could be in for a pretty good ride. But the big news is to the market correction. The Fed ultimately dumping the market with that news on Treasury yields, people moving assets out of risk on Bitcoin, Ethereum, many altcoins, and going into what they deem as risk off, which obviously is Treasury yields. They're much more in the natives TradFi sector secure, but they're always a risk. And I think we'll see money flow back. We know ETF investors are still here. And again, the charts for me are still looking very optimistic. But let me know what you think in the comments down below. Equally, let me know how much have you lost on your portfolio today. It is an absolute hurt. But if you are interested in getting into a great project, again, check that link out for Marbits. We are holding around a $700,000 market cap, strong liquidity and real business utility. So come and check what we're all about. We'd appreciate that so much. As ever, thank you so much for watching the video. Hit that subscribe button and don't forget, smash that like button and check the links out. I'm on Instagram, TikTok, and everything else. Show me some love and support. I'd appreciate it so much. And we'll see you in the next one. Bye-bye.